Already.
You're welcome once again to my channel. Today we are going to be looking at cashbook and the three types of cashbook that we have. But before we go into our lessons today, I would like you to like my channel and don't forget to subscribe to my channel for more content on various types of accounts and statistics. Now, first, we already know that cash book has to do with recording of transactions that goes on within an organization in terms of cash, because most times our transactions are documented or are done in cash payment. Though sometimes we have some bank transactions, but cash book takes into account every transactions that goes on within an organization, be it income or expenses. We have three types of cash book, which are the single column cash book, the double column cash book, and the three column cash book. But now, right now, we are going to base our surveys on single column cash book. Single column cash book accounts for only cash transactions within an organization. And we have the debit side and we have the credit side. And single column cash book is divided into 8 columns, which are the date, particulars, that is the transactions that took place, folio, or this is called folio number. Sometimes they give you the number in which that transaction was recorded in the ledger. Now, when such numbers are given, where you can find those transactions recorded in the ledger, we put the ledger number under the folio. Then we have the amount. Also, we repeat the same thing under the credit side. Normally in account, debit side accounts for every expenses and credit side accounts for every income. But in terms of cash book, we switch that principle. Now, every income is recorded under the debit side and every expenses that goes on within an organization is recorded under the credit side. Now, come down to our question. Say record and write the following transactions into single column cash book. We have first January 1st, cash in hand. Cash in hand is actually an income. It is money that you have within an organization, or it can be called capital. So we start it in our debit side. I have January 1. What do we have? Cash in hand, which is also balance brought forward, and this is 15,000 naira. I have 15,000 naira under my amount. January 6, purchase goods for cash. Now, when you purchase goods, it is an expenses because the goods is still in your possession. You've not converted it to profit. Remember, under production, we say production is not complete until goods produced get to the hands of the final consumer. And as long as the goods is in your possession, you've not made profit. You've lost money and you have goods that has not been converted to income. So it will go under the credit side. So I have my date, January 6th, and our particular is purchase. Amount is 2,000. Then on January 16th, received from Abudu, meaning that it is an income into the business. So I have January 16th, and that is from Abudu. We received from Abudu, and which is 3,000. Then we have January 18th, paid to Bade. Now, paid is an expenses. You can guess where that is going to. So this is January 18th, Bade, and the amount is 1,000. We have January 20, cash sales. Where would that go to? Definitely it's going to go to our debit side, because once sales is made, profit has been accounted for. So it is an income. So I have January 20. January 20, we have cash sales, or I can just put sales. This is 4,000. Now, January 25, paid for stationaries. Paying for stationaries is an expenses because it's reducing the amount of money we have in the organization. So I'm recording it here. January 25, under our credit side, I'll put stationaries as my particulars, and that is 60 naira. Then January 30, paid for salaries, also expenses, because it's reducing our value, the worth of the organization. So we have salaries, and our salary is 1,000. Then we have January 31st, purchase office furniture. Purchases is also an expenses, so it goes into the credit side. So I have furniture as my particulars, and the amount is 2,000 naira. Now we've successfully transferred every of these transactions into the cash book, single column cash book. Now we come to closing of our cash book. Now we close with the amount, the higher amount. From here we have, this is 18,000, 22,000, definitely higher than this. So what I'm going to do is I'm going to close with 22,000, because 22, our income is more than our expenses, meaning we are making profit. So in our next accounting year, or in our next trading year, this will be our balance carried down. Balance carried down is, we are going to add all the expenses we incurred within this accounting year, which is 2,000, 3,000, 4,000, 6,000, 6,060. So let's do this. Our expenses is 6,060 naira. I'm going to subtract it from 22,000. So we'll know how much we have. This will give me 0. This is 110. I borrow 19. Put the 1 at 10. This is 4. This is 9. Borrow. This is 111. This is 515. So my balance that I'm going to carry to our next accounting year is 15,940. Meaning when you sum all this together, it brings us to the amount we closed with. Then under this place, okay, now under this place we can actually still bring this balance down here, which is balance carried forward. Okay, we can bring this as our balance carried forward as 15,940. Then we close. Remember, you close with a double line. Now, once you close with a double line, it means that you are done solving. You are done entering your transaction. And we don't forget to close this. We also close with a Z, so that no other transaction can be entered. So in an accounting terms, once this is closed, any transaction that is entered into this place means that it is fraud, it is wrong. So we close with this. This is a single column cash book of every of these particulars has been entered into this. So once more, don't forget to like and subscribe to our channel for more content. Thank you.